So today I want to talk about the tax bill, one section, that's it, section 899, which seems to have all our trading partners in a tizzy. And so I figured we would go through it. I am not an expert in tax law. I think this kind of falls under the Moran Papers. And so we'll kind of go through it, and then you can make up your own mind. Now, I think it was June 3rd, and this was on the front page of the Asia Times. And this capital gain tax would be the coup de grace for the dollar. And they go into the reasons why. So why don't we understand what Trump is proposing? Okay, so 899 is we are going to impose taxes on individuals, countries, and companies that we feel have unfair taxes against America. And you can read the rest of it here. So you can read all this. It's interesting, but I would say the first paragraph there, the last sentence, these taxes are defined to include UTPR, DSTs, and DPTs, okay? So what are they? Here are the 3 tax laws that other countries have passed against global corporations, okay? And we've heard of these before. The UTPR is part of the OECD's global tax reforms, basically saying that no matter how you add it up, the corporation has to pay a minimum of 15%. That's it. That's what it's all about. DST is digital service tax. You know, all our oligarchs are going crazy on this because, you know, other companies want to charge taxes on these major companies like Google and Facebook and so forth. And so you know that they're all over Trump on that. And then the DPT is where we tax the global corporations because they're maneuvering. It's kind of like, you know, Facebook and Apple, they send everything to a letterbox in Ireland, where they only pay a 15% tax. And the only reason they're paying 15% tax is because of that first one, the UTPR, okay? And so we want them to stop doing that to our corporation. And here's a little, you know, chart that you can go through and see what they're talking about. So 899 is about the United States from trying to stop other countries from minimum taxing of our global corporations, and most of them are our big tech corporations, okay? So this is all about our corporations not paying tax. That's all it's about, all right? But there's issues with this. Today in the Financial Times, or yesterday morning, the lead story was that executives from around the world and American executives are going to Washington this week to, you know, lobby against this bill. And they're hoping to at least have it put off for a year or have reductions in this. So the chief executive of the Institute of International Bankers said that this will stifle foreign direct investment, risk financial market disruption, and endanger American jobs in states and communities across the country. They point out that foreign banks underwrite more than 70% of the debt issuance for foreign companies in the U.S., representing a third of the total of dominated dollar debt. The foreign banks have lent more than $1.3 trillion to U.S. companies in 2023, and financing of international companies supported $5.4 trillion in foreign direct investment in the U.S. These are foreign headquartered companies operating with $270 billion in revenue. Now, the only thing I'm going to say about this is the first paragraph, unfair foreign taxes. Most EU countries, okay, the UK, Australia, Canada, and others around the world. Well, what does that tell us? Our closest allies. We are going to go after the people who invest in our country more than anybody else, okay? and go after our closest allies to make them stop this. And there it is, right in the last sentence. Republicans in Congress have searched for ways to keep the cost of Trump's big, beautiful tax bill, i.e. tax cuts for the oligarchs, down. And Section 899 would bring in $116 billion over the next 10 years, $11 billion a year. So what do we care? Well, if anyone's been following this channel, we feel very strongly that we're already seeing a reduction of people's commitment to American investments. In the first quarter of 2025, foreign investors have sold $44 billion worth of U.S. stocks, okay, because they're moving away. We're seeing our treasuries move up in price because people are scared that we're going to either take their bonds, their treasury bonds here in America, or we're going to tax them, which we have proposed. Moran has proposed a 30% tax, okay? And you have to understand something. That 30% tax is basically because we have given you the right to work in the US dollar. And because of that, this is what we are going to do. Okay, so I want to take a step back here. And we said yesterday how, and I'm going to do another video on this, how for America, in our last video, it's been estimated we need $2.9 trillion for our infrastructure to deal with as we kill all the global supply chains. We have to bring them home. We have to build factories. We don't even have one battery factory in America. It's going to cost billions to build it. We don't have any rare earth minerals. Trump is acquiescing to China because our entire automotive industry, everything is being shut down over rare earth minerals. I keep pointing out to people, Biden has funded 2 plants. One comes on in 26, the other in 27. They do 1,000 pounds a year in rare earth minerals. One F-35 has 918 pounds of rare earth minerals on it. This is not counting your phones, your laptop, every computer, everything has rare earth minerals in it. We had to give it up, okay? So here's what I want people to think about. We are going to need huge quantities of money so that we can go into the new world from a position of strength. And it's going to take 10 to 15 years. And we obviously do not have enough money on our own, or we would not be running these huge deficits. It is what it is. So why are we doing this? Are we really doing this for $116 billion over 10 years so we can give the oligarchs a tax cut? Is this really meaningful? In the Financial Times article, there literally is an oligarch who says, listen, I'd rather pay the tax than have them stop investing in America. He says, that's crazy. So we have to figure out what we're going to do. We don't have enough money, period. Well, let's put it this way. No one in the world has enough money. So they're all going to be taking their money home to work with, all right? So we may look at this as a trade war, but we already know it's beyond that. There's political, social, all kinds of security issues that are involved with what this country is trying to do right now, all right? But here, I want to put it to you this way. With everyone facing the exact same situation that we're facing, okay, then when people start to liquidate their investments to bring them home so that they can deal with their supply chain, building of their factories, having the tariffs, offsetting the tariffs and everything like that, think about it. We're the biggest, deepest market in the world. This is where most of the money is. China's a closed system. So if everyone starts liquidating, the people that are going to liquidate is who? Us. Okay? And if they liquidate us, then how are we going to raise our debt? What are we going to do? We really need to think about this. Obviously, we haven't. Like and follow